Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the market put in a pullback and tested the 90.5 to 92 support area where responsive buyers were active. At this point, heading into the open, we know that bigger picture, the bias is still bullish, but short term, a break above 94.75 to 96 quarter would be needed to confirm the buy side back in short-term control. Now, that doesn't mean that our bias is necessarily bearish below the bull bear zone or below that micro bull bear zone. That's just a reference area to understand what the market needs to do in order to shift even the very short-term control back to buyers. So if you're bouncing off of the 91 quarter to 92.75 pre-market support, and then you're holding above 94.75 to 96 quarter, that would confirm the buyers in control and bring the 01 half to 0175 prior close and VPOC into play, and the 0475 to 0675 initial resistance zone into play. Now at that point, since buyers would be active and in control, if the market internals and the momentum is supporting the upside, and we're getting some sustained upside momentum, and there aren't really any red flags, then we can even head up to fill the gap at 08 quarter and test the 10 quarter to 12 quarter resistance zone. Now on the downside, a break below 91 quarter to 92.75 would bring the 85 to 87 half initial support zone into play, and responsive buyers can still be active at that zone, and they can still defend that area for a move back up, because at this point, the bigger picture bias, the larger time frame bias, is still going to be bullish even if we pull back to 85 to 87 half. So the only time that we're going to be cautious on the long side today is if we're seeing unusual weakness. If we're seeing extreme weakness in the markets, which would indicate more of a reversal rather than a normal pullback within a overall upswing. So in that event, it would make sense to be a bit cautious on trade location, and even if you're going to take a long, wait for the middle or lower edge of a support zone if you're going to trade it. But aside from that, if it's a very normal pullback, if the advanced decline line is still indicative of a balanced market, which would mean that even if the AD is down at, minus 1,000 or 1,200, it's still very much indicative of a balanced market, then we can still expect buyers to defend the 85 to 87 half area in the event of a, more extreme swing, perhaps 81, 82. But ideally, you want to see the market holding 85 to 87 half if the buyers are going to retain control. And really, even 91 quarter, 92.75 is a zone that has potential to hold. We don't necessarily have to go all the way down to initial support, but even if we did, it would be okay. It wouldn't necessarily change the entire bias of the market. And from there, we can just head right back up to the 94.75 to 96 quarter micro bull bear, and back up towards the 01 half to 0175 area. But right now, essentially we're still trading in more of a balanced market. We had some short-term directional movement over the last couple of days, and now we're just developing yet another trading range. But the overall bias still is bullish, and especially if we can hold the pre-market support zone and then get back above micro bull bear, that would confirm the short-term bullish bias and then bring the prior VPOC and gap into play, initial resistance, and then beyond initial resistance, we will have to see, a rising advanced decline line. We'll have to see the other markets, participating in the upside move. So, if you're watching Nasdaq, ideally NQ can get back above the 44.79 half HVN, and if it can do that, then it'll just be a further confirmation that the buy side is back in control. Because right now the short-term inflection point in NQ is that 79 half HVN area. So if we can get back above the 76 to 80 zone in NQ, that would confirm that the buyers are stepping back in. But larger time frame bias is still going to be bullish, and for that reason, if we are short-term exhausted into the 85, 87 half area, it'll still make sense to attempt a long there, 81, 82, similar idea. You don't really want to see it going much far beyond that area. The support zones below are still active support and valid areas of support, but we don't really want to see too deep of a pullback because that would begin to invalidate the strong breakout move that we saw a couple of days ago. So, we want that bullish price structure to still remain intact if we're going to get any kind of decent upside movement. So, off the open, that's what we're going to be looking for. Are there conditions that are indicating more of a balanced market, or are there conditions that are signaling more of a trend down type environment or a complete reversal? And as long as it's not a complete reversal, we can still fade any short-term price movement into support. But if it does start shaping up into a complete reversal, then we know that a lot of people will be caught on the upside, on the long side, and then we can even try to spot some short setups. And also keep in mind that if the entire day is more indicative of balance, then you can expect two-sided movement. It doesn't have to be necessarily purely directional. But those are things that we need to assess once the market opens based on the level of strength and weakness that we're seeing across the board. That's the assessment of the environment. But overall, we know that this market is still in more of a bullish short-term phase. So the focus will be more on long setups. We'll be cautious still on the short side. Those were the main thoughts. Let's see if the buy side can maintain control this morning, and we'll take it from there.